Good morning, ladies and gentlemen. Welcome to the show. Today is November 4th, 2019. It's a Monday, and let's get started. Let's open up the charts right here, and let's take a look at what's going on. First thing we're going to take a look at is the silver price today. We're looking at silver staying in this range, the new range, but it's at the high side of the new range. It's at $18.10 right now, and $18.20 ask. It's 2 cents up on the day, so that's good. We're getting ready for a big. I think a big. This is my opinion, but I think we're getting ready for a big burst in the price of silver and gold. But at the same time, I want to talk to you about something about the markets too. But first, we're going to take a look at gold today. See what it's doing. 1509 bid, 1510 ask. It's down $4.30 on the day so far, but it's right in that range. So later in the day, it could fluctuate back up and be on the positive side. It could be up a few dollars, maybe $2 or $3 by the end of the day or something like that. It wouldn't surprise me to see it up $2 or $3 by the end of the day. The reason why it's down $4.30 right now is because the dollar is riding strong right now. Just in this, but I think that's a short-term thing too. The dollar could turn down later today and gold start to turn back up. But these are only small movements right now. Let's take a look at cryptocurrency. Cryptocurrency is holding its own rather well at $248.9 billion. Let's refresh the page. 249.2 billion. So it's moving up right now. We're looking at Bitcoin at 92.88, Ethereum at 186, Bitcoin Cash at 293, Litecoin at $61.36, EOS at $3.44, Binance Coin $20.69, Bitcoin SV is $129. And Stellar is 6.9 cents. So those are our top coins. Now let's move on and take a look at the Dow today and see what it's doing. Now here's what I really want to talk about is the Dow. It's up 146 points right now. Okay. Have you ever been out to a concert or whatever with a big orchestra? And the orchestra makes something in the end called a crescendo, where they all play their instruments, and the conductor holds his hands up in the air, and he waves his hands up in the air and like his palms up toward the sky, and the orchestra makes what's called a crescendo. It's like the big finish. This is what the Dow Jones is doing right now. It's making a crescendo. Is setting all-time highs. You must remember, what goes up comes down. If something goes up, it can't go up unlimitedly forever. Okay, unless we have a hyperinflation right away. We're not going to, have a hyperinflation right away. Hyperinflation is something that's caused by like a yin-yang sort of thing, where you get deflation that stimulates it into hyperinflation, and the two kind of work hand in hand, back and forth. So first we get basically things start to crash, and then the central banks come in, they pour a whole bunch of money in there, and then that's what creates the inflation. And we saw that just happen. We saw it happen in 2008. And we also saw that just happen with the Fed dumping a whole bunch of money into the overnight markets, the repo markets. I personally think that they were actually recapitalizing one or more banks. And I think that if it had to come out what really happened, it would have caused an awful lot more panic in the system. But I think they did it behind the scenes where we couldn't see what was going on. They just basically recapitalized some banks. And so I think that's a big sign of what's to come, So this market is making a crescendo right now. That's what it's doing. Let's take a look now at crude oil. Crude oil is $57.10. It's up 90 cents on the day, 1.6%. That's quite a large jump in price for sweet light crude today. Let's take a look at U.S. Treasuries. What we're looking at is quite substantial moves to the upside for U.S. Treasuries. We're looking at almost 5 basis points on the long end of the yield curve. And that's where it's moving the most. It's moving most on the 30-year and 10-year. That's quite substantial. 4.5 basis points on the 10-year. So we're seeing treasuries on the move where yields are starting to rise. Quite seriously, we could see an uncontrollable move, a very rapid move in treasuries, yields spiking upwards at a certain point in time. I'm kind of watching for that. I'm keeping my eye on the U.S. Treasury market, and I'm keeping my eye on the corporate debt market very closely right now. The corporate debt market has the potential to take this whole game down, and we got to keep our eye on these things very carefully. Let's take a look now at the U.S. dollar index. 97.37, and we're looking at the dollar index rising today. Now, see this little rise in the dollar index that's happened over the last few hours? This is correspondingly putting pressure on gold to the downside right now. That's what it's doing. But later in the day, the dollar will probably come back down to this line where it was earlier, and we'll see gold rally back a few dollars. So that's what's going on with that. Let's take a look at this article here. Blaine, it feels we've reached the end of something. And I totally agree. It has a certain feeling to it right now. It's like investors are very cautious right now. And it has a certain feel. It says, trawling through the market headlines this morning, I'm struck by the number of comments about how much better the investment environment looks. It's less likely for a global recession. I have to laugh. Corporate earnings aren't as bad as expected, and jobs are growing. I'm unconvinced, he says. I see worrying connections across the wires from my perspective, which admittedly has been from a train in the middle of nowhere. It feels as though we've reached the end of something. Time has been called on this particular era of irrational market exuberance. My spidey sense is tingling due to a manner in which events across markets, individual stocks, politics, geopolitics, and a gut instinct are all connected. He says, I'm not predicting a sudden massive financial collapse, just a wake up and smell the coffee correction in bonds, which feels underway, and a selective deflation in oversold sectors of the stock market. Well, I'm a little bit more bearish feeling about all this. I believe that we're in for a really bad market correction because the market is only being supported now on what the Fed's doing. It's got no real connections to reality and to market valuations and I mean corporate earnings, all these things. The market is like got a disconnect right now. And, this ain't going to last, We're going to see some volatility coming up in the very near future. You have to watch for that. Massive volatility. And, then the Fed will step in with a reaction to all that. This is exactly what happened not long ago. People have such a short memory as the Fed is still in panic mode over having to recapitalize some of these banks. Liquidity was drying up in the system so bad that if they hadn't have done it, we would have had a 2008 crisis right now. The whole world is undergoing a slowdown right now. This is massive in China. I can't begin to tell you guys how massive this is in China, the slowdown, and how China's reaching the the limit. Their central bank in China is starting to run out of tools. For real. I mean, they don't have the ability, like the Fed, to just print endless amounts of money. The Chinese economy is shrinking real fast. You know, that can carry the world down all by itself. The Chinese economy, when the real numbers start to come out. And I've been preaching this for quite a while, how the Chinese economy is rolling over. Listen, thank you guys for listening to this show. And you guys have a great day, and give me a thumbs up. Bye-bye, guys.